Imagine opening your investing app on a Tuesday morning and seeing one name everywhere: SpaceX. The headlines are impossible to avoid. Biggest IPO in history. The future of humanity is finally available to investors. Don't miss your chance. Your group chats are buzzing. Financial influencers are posting screenshots. CNBC has countdown graphics. People who've never talked about stocks suddenly have opinions about launch schedules and satellite internet. And maybe you're sitting there thinking the same thing millions of people are thinking right now. If I don't buy this today, am I going to regret it for the rest of my life? Because let's be honest, this isn't some random company going public. This is SpaceX, the company that lands rockets vertically, the company trying to make humans a multiplanetary species, the company behind Starlink, a network that's changing internet access around the world, and the company led by Elon Musk. So if there was ever a stock that felt untouchable, this would be it. But here's the uncomfortable part. The biggest risk in this IPO isn't today. It isn't tomorrow. It isn't even next month. The real risk starts after 90 days. And Elon Musk knows exactly why. Now, before I go any further, let me be very clear about something. This is not a video about SpaceX being a bad company. In fact, by almost every measure, it's an extraordinary one. They launch more rockets than entire countries. Their commercial contracts stretch years into the future. Starlink serves millions of customers across more than 150 countries. Governments rely on their technology. Defense agencies depend on their capabilities. If you're looking for someone to tell you that SpaceX is doomed, that's not what this is. This video is about something much more important. Because a great company and a great investment are not automatically the same thing. And the difference between those two ideas is where ordinary investors often lose money, especially during IPOs, because while most people are watching the price on their screens, the people who built the deal are watching the calendar, and calendars don't care about hype. See, somewhere in Manhattan right now, investment bankers are probably staring at trading monitors with very different emotions than retail investors. Every time the stock moves higher, millions of people celebrate. But for insiders, every percentage point upward may simply bring them closer to their next opportunity to sell. That sounds dramatic. I know. So let me earn it. Everything I'm about to walk through comes from public documents and the mechanics of how deals like this work. The information isn't secret. The advantage has never been access. The advantage is paying attention. Let's start with what happens on day one. When most people imagine a company going public, they picture the entire business suddenly becoming available to investors overnight. But that's not how IPOs work. Only a small fraction of shares actually begin trading. In SpaceX's case, roughly 5% of the company enters the public market. 5%. The remaining 95% stays in the hands of insiders, founders, early employees, executives, venture capital firms that invested years ago. These people often bought their shares at prices the public could only dream of, but they can't immediately sell them, at least not yet, because of something called a lockup agreement. Lockups exist for a reason. Imagine if every insider dumped their shares on the first day. Supply would flood the market, prices would collapse, chaos would follow, so companies impose restrictions. The standard approach is simple: 180 days. Everyone waits. Then the lockup expires. One cliff, one event, one headline. But according to the structure we're discussing today, SpaceX isn't playing by the standard script. Instead of one giant unlock, there's a schedule, a sequence, a countdown. And if you're buying purely because of today's excitement, that countdown matters far more than the opening bell. Because the first 90 days don't represent safety. They represent the beginning. The first unlock window arrives around day 70, then another, and another, and another. By the time day 90 rolls around, investors focused only on launch videos and Elon Musk tweets may suddenly discover something they never bothered to read. The people who got in early finally have opportunities to get out. Think about that for a second. The employee who has spent years watching their net worth exist only on paper. The venture capital fund that promised returns to its clients. the executive whose compensation package depended on stock appreciation. For them, liquidity isn't theoretical, it's the finish line. And after years of waiting, the doors begin to open. That's why day 90 matters. Because hype is strongest when supply is lowest, and pressure often increases when supply expands. History has shown us this repeatedly. Palantir experienced heavy insider selling after lockups expired. Rivian stocks stumbled as major stakeholders reduced positions. Uber struggled around its expiration period. Even companies with incredible businesses weren't immune. The pattern isn't mysterious. The more enthusiasm pushes prices upward before unlocks occur, the more tempting it becomes for insiders to lock in gains. Now here's where Elon Musk enters the story, because one detail changes the entire narrative. Elon himself reportedly remains locked up significantly longer. He can't immediately participate in the same selling windows available to others. And on the surface, that's reassuring. The founder isn't rushing for the exits. That's a positive signal. But look closer. Because while headlines celebrate Elon's commitment, other insiders may already be navigating their own exit schedules. Early employees, investment firms, executives below the very top. They don't necessarily operate under identical timelines, which creates an interesting dynamic. The person whose name drives excitement stays locked, while others potentially gain flexibility. It's brilliant from a perception standpoint. Elon projects confidence. Meanwhile, the broader insider ecosystem gradually gains liquidity. Neither side is doing anything wrong. This isn't illegal. This isn't some hidden conspiracy. It's simply how incentives work. People who waited years for access to their wealth eventually want access to their wealth. The question isn't whether they'll sell. The question is whether public investors understand when they can. Because if you believe SpaceX is genuinely one of the greatest businesses of our generation, you don't actually need to own it on day one. You don't need to buy during maximum excitement. You don't need to compete against countdown clocks. The greatest companies in history didn't stop existing 6 months after their IPOs. They continued executing, growing, compounding. The patient investors still had opportunities, sometimes better ones. So maybe the smartest question isn't, how high could SpaceX go tomorrow? Maybe it's this. What will SpaceX look like after 90 days of reality replacing excitement? After earnings reports, after unlock windows, after insider decisions, after headlines fade. Because eventually, every IPO stops being a story and starts becoming a business. That's when investors discover what they actually own. The market rewards patience far more consistently than urgency. The loudest number today is the stock price flashing across your screen, but the quieter numbers, the dates hidden in lockup schedules, the mechanics buried inside prospectuses, those numbers often shape outcomes long after the excitement disappears. SpaceX may very well become one of the defining companies of this century. None of what we've discussed changes that possibility, but understanding the deal behind the dream matters, because extraordinary companies can still have complicated entry points. And the people who thrive over decades aren't usually the fastest. They're the ones willing to wait for information instead of chasing emotion. So if you're thinking about buying SpaceX because everyone else seems to be doing it, take a breath. Open the calendar. Mark the dates. Watch what insiders do. Watch what earnings reveal. Watch how reality interacts with expectations. Because the real risk doesn't begin when the IPO starts. It begins when the countdown does. And sometimes, the best investment decision you'll ever make is deciding not to rush.